Welcome to Topic 4, the Balance Sheet, Part 1. To give you an overview of everything we're going to be covering in Topic 4, we have the following objectives here. So first of all, we'll have a look at the nature and the purpose of the balance sheet and how it links in with our accounting equation. Then we'll explain assets and the claims against our assets, and as you can see them on the balance sheet. We'll look at how to classify and also measure our assets and our liabilities. We'll have a look at different balance sheet formats. We'll be able to scan and interpret a balance sheet, understand the assumptions behind and the limitations of the balance sheet, and then lastly, we'll go ahead and we'll prepare a simple balance sheet. So for the Part 1 video, our objective is just to have a look at the nature and purpose of the balance sheet and how our balance sheet links in with our super important accounting equation. So first of all, our balance sheet, what it shows us is a financial position at a single point in time. So generally that's 30 June, so the end of the Australian financial year. Our balance sheet also shows us a list of our assets, our liabilities and our owner's equity as at that one point in time. So again, generally as at 30th of June. We can also call our balance sheet the statement of financial position. So the terms are used interchangeably. And our balance sheet shows us our assets, which are a result of our investing decisions, and it also shows us how have we financed these assets. So what are our financing decisions? What decisions have we made? Have we chosen debt or have we chosen equity to finance our assets? So why do you need to know about the balance sheet? It is a really common document that is used in business. So it does tell you all about what the business owns and what they owe. So you can make some basic interpretations about a business by looking at a balance sheet. So in terms of practical usefulness and how you could use a balance sheet, well, if say as a business or as a sole trader, you want to go and get a bank loan, the bank is going to want to know what do you own and what do you owe. So a balance sheet gives them a perfect little snapshot of both of those items. So looking now at the link between the balance sheet and the accounting equation. So what a balance sheet does is it gives us a really formal statement of the accounting equation. So when we prepare a balance sheet, what we must always make sure happens is that the total of our firm's assets must always equal the total liabilities plus owner's equity of the business as well. So our accounting equation, as I've said, super important. It must always equal. So our assets must always equal our liabilities plus our owner's equity. So it must happen at every stage of the process. And definitely on our balance sheet, we want to make sure that that equation is standing true. So if you recall from Topic 2 that our accounting equation can be written as OE equals A minus L. So what this equation also represents is it's also one of the formats of a balance sheet, and that's the narrative format. So you'll see that when we get to the Part 4 video, what the narrative format looks like. So in this format, the term net assets is also used to describe total assets minus total liabilities. So whenever you see net assets, it's more or less saying that's the same thing as equity. Another point to take away from that is when you see the word net in front of something, see the word net, it means there's a calculation behind it. So net assets, assets minus liabilities. So that's your calculation that's come in behind it.